Hey everyone, this is Cheston over at By the Books Consulting. And you guys are fortunate enough to be working with Jennifer Carroll from Get Your Credit Perfect Now. She's fantastic at what she does. And not only that, she has a great big heart, and she cares about making an impact in the lives of each individual she touches so that they can achieve ultimate success in whatever it is they're seeking to do, whether in business and life in general. So you're in good hands with her. My name is Cheston Bolgen, and I'm adding to this journey you're making with business funding and business credit. Hopefully I can be somewhat of help with this presentation. We're going to look at financial reporting mastery, which is something that's very important to be able to implement when you're looking for business funding. Okay. So just a bit of a background. This is my company, By the Books Consulting. We specialize in bookkeeping, tax planning, and tax strategy. We do business and individual income tax. I prefer to work with businesses. I do like the challenge of helping businesses find strategically a way to reduce their exposure to taxes. And I like to definitely working with people to uncover ways where they can actually more accurately reflect what they're doing so they're not overpaying in taxes. Also do financial analysis and consulting, CFO services. So anything dealing with operations, financial efficiency, I'm your guy. That's me, Cheston Bolgen. I'm the senior consultant here, owner and chief financial officer. You can reach me by email, cheston@bythebooksconsultants.com, or you can call direct, toll free, 888-4BTB now. My extension is 800. Okay, so here's an overview. We're gonna talk about financial reporting and what it is. Then we're gonna get into financial statements and their components, and then talk about some easy systems for you so that you can record your financials for your business and stay up to date. And after that, we're just going to wrap up. Hope that sounds fair. All right, so what is financial reporting? So basically, it's a communication of your business's financial information and position to an end user. An end user being the people who may be interested in putting money into your business, an investor, a bank, lender, whatever. So that's basically it, just communicating that information. But there's a system to do that. There's an actual fundamental way to do that, so that when you do apply for whether it's a loan or you're looking to take on an equity partner, they're going to want to see something in a certain format. And it's important for you to have that format put together and put it together in a way where it reflects it highlights the positive aspects of your business and its story. So just some basic knowledge and information on, kind of a discernment here on the financial reporting and financial accounting versus managerial accounting and managerial reporting. Financial accounting has more of an external purpose. It is that communication that we just talked about. Whereas managerial accounting deals more so with internal functions and internal operations. So just to give you an idea, managerial accounting covers, internal costs, cost control, cost procedures, like unit cost, production costs, customer acquisition costs. And we look at those things in order to determine on a day-to-day how we can improve how we're doing business. Whereas when you're looking at, financial accounting and financial reporting, it's really just telling the result of all of that operational activity and operational accounting. It deals more so with the ratios, the efficiency. It deals with, your net worth, your liquidity, profitability. You look at turnover ratios, cash flow, all these different aspects within financial reporting to determine the overall health of your business. If you're looking at managerial and cost accounting, It's more so the day-to-day details, whereas financial reporting is that movie that you watch that summarizes certain points. You know how you never see anybody go to the bathroom in a movie? It just doesn't happen. It's, you know, people actually have this part of human condition where they need to use the bathroom, but you just don't see that happen in movies. Well, managerial accounting shows those details, where financial accounting is more so the movie, and they omit all those little things in between, cut out scenes and everything. But it gives you the big picture of what happened. All right, so communicating through financial statements. So what are these financial statements? What does that look like? All right, so there are 4 major components to a financial statement. You have your P&L, which is your income statement, and you have your balance sheet, and you have your cash flow statement and your statement of owner equity. For the most part, 9 out of 10 times, 8 to 9 out of 10 times, your lenders will not even request the cash flow statement or statement of owner equity, but they will 9 out of 10 times ask you for the profit and loss statement and the balance sheet. So those 2 are we're going to focus on here. All right, and we're going to focus on what they are. It's going to give a brief overview on what they are. Maybe you know this, maybe you don't. We're just going to go over it real quick, and then show you some systems on how to, you know, keep this up to date and keep this tracked using some technology and everything, and simplified systems to make sure that when people ask you for this, it's always going to be ready. Okay. So your balance sheet, it's basically shows the net worth of your business. It's a simple formula: assets equals liabilities and equity. All right. When you think of assets, these are, you know, cash and things that are easily converted to cash. We call these current assets. And then you have fixed assets, which are things that, you know, won't be able to be easily converted to cash, but they're worth a substantial amount. These are things that you would invest in with cash, like a property or some equipment. If you're a manufacturing company, you invest in equipment. Or if maybe you have a transportation company, you invest in vehicles. Or if you work in an office, you have furniture and computers and equipment. All that goes together with your asset base. All right, and then outside of that, on the other side of your balance sheet, you have your liabilities. This is if you borrow money and you use the borrowed money to invest in your business. Well, how much do you owe? It's short-term notes, long-term notes, mortgages, and things of the sort. And then you have equity. How much money did you put into it yourself? Like the owners, how much capital do they have to come out of pocket to invest in their company? How much skin do you have in the game? And then how much of the profits, called retained earnings, are reinvested in the company? How much do you have in the way of retained earnings in your company? All right. Typically, you like to see a lot more equity in the company than you have liabilities. So your income statement is the operating information. So you have sales in your company, whether you're selling your service or you're selling a product, it's sales. So you take gross sales minus cost of sale or cost of goods, and you come up with something called a gross profit. You take that gross profit, and then you have a whole bunch of operating expenses after the fact. You subtract those operating costs, and that will leave you with your net profit and net loss. All right, so those are your balance sheets. That's your balance sheet and your income statement. Quick overview of what those are. If you knew what they were, great. If not, well, now you have a complete understanding of what those 2 statements are. All right, so how do you keep track of this? What are we doing in order to make sure that we're ready to present our financials to a company or to an investor or to a bank or to a lender for business funding? How do we get this information to put on our Dun & Bradstreet report so that we can build our business credit score? All right. Now, are you sometimes you could have multiple sources of revenue in one business. How are you tracking all these different revenue points? What about all of these expenses? I had a company that had probably about 100 expenses on the chart of accounts. And how are you keeping track of all these different categories of expenses in your business? Do you have a system there? All right. Or are you just keeping receipts? Or Are you writing these down? And at the end of the year, say, okay, well, this is how much I thought I spent. Or you're doing something in between, having a real detailed bookkeeping system and this. All right. But you want to reduce the headaches. I remember when I first started as an entrepreneur, I knew absolutely nothing. I had a carpet cleaning business. At the end, I had somebody mentor me in general entrepreneurship. He told me, man, keep your receipts and bring them to your tax guy at the end of the year. So I brought the shoebox of receipts to my tax guy. Brought this thing to my tax guy at the end of the year. He looked at me sideways and put this thing to the side. I said, here, do my taxes. And he threw this box on the side of his desk, like on the floor, and kind of disregarded it. And I'm thinking to myself, man, I spent some time and energy to grab these receipts and put them away and store them and put them in this shoebox all folded and wrinkled up like this so that I could bring them to you this time of year and you could put all this information into your system and do my taxes. Yeah, I didn't know. And some people here on this call might not even know that that's not the thing to do. Receipts are good for something we call substantiation. They help justify what you say you spent, but there's nothing more to it than that. They're important so that if you do have an audit, they can come in and look at those and say, okay, yeah, he wrote down he had this expense. So this is recorded. This is a recorded expense. So he has a receipt to go along with it. We can say that this is valid. All right. But this did not help me prepare for taxes. I also wasn't tracking my business to have lenders take me seriously. So if I have receipts and I'm not really tracking my business like a business owner, well, how can an investor or a lender take me serious as a business owner if I'm not taking it serious myself to manage the financial tracking and financial reporting of my own business? Like, I won't know the day-to-day of my business operations. Who would want to do business with somebody who doesn't know the day-to-day of their operations financially? It doesn't make sense. So that's why it's important to actually have a system to do this. You want to have something that automates most of your reporting. You want to see how, lenders want to see how your business manages its resources. Financial statements and financial reporting tells the story of how you're managing your resources. How do you record your story and tell it well? We do this through effective bookkeeping. Yes, bookkeeping. It may seem simplistic, mundane, or whatever it is, but bookkeeping is what we need to do in order to create good, solid, foundational financial reports. So what bookkeeping does is it takes our operations and flows them to the balance sheet, and takes the balance sheet and flows them back to operations as a continuous cycle that really tells a continuous story of how your business is doing. You want to develop an easy system for this, all right? So in order to establish this, one, you want to track your financials for monthly reporting. All right. Typical periods for reporting your financials it ends every month. So you have these many periods throughout the year, which build up to an annual period. And then at the end of the year, you file taxes, and that's the story for the entire year, which is basically the taxes are a big financial statement. That's what it is. It shows your balance sheet. It shows your income statement in a nutshell. But how you record that for the year so you can have accurate reflections of what that is when you do your taxes, or when you send this to a lender, or when you apply for a loan, or when you want to analyze your business. You want to use a cloud-based accounting platform like the QuickBooks or ZipBooks or FreshBooks, something that allows you to get easy access to it online. You also want to have something that links your bank accounts and your credit cards accounts for your business. By the way, you definitely want to have a separate business bank account, separate business credit card to use for your business that is not in any way, shape, or form mixed in with your personal bank accounts or your personal credit cards. That is first and foremost. Definitely have that separation. After that, you want to make sure you're able to print these statements out. And when I say print out, I don't mean print them out on a sheet of paper, but you want to compile these reports every month so that you have a record of it. So what do I do for clients? So I work with people in their bookkeeping. And what I do for clients is I create these reports every month and save them as a PDF. That's the printout. The PDF is the printout. You save that report so they know what happened each month for their business. They see their income statement, they see their balance sheet, they actually see their statement of cash flow, owner equity, all that stuff is reported every month for the client. That way, when it comes time to show these to any potential investors or lenders or file their taxes at the end of the year, they're already ready to do that. They're already ready to transpose that into your D&B report. So once you have all that done, you want to make sure you establish what we call our chart of accounts for the business. So your chart of accounts basically are the actual specific assets, like your checking, savings, cash accounts, accounts receivable, inventory, equipment, vehicles, any prepaid expenses, and so on and so on and so on and so on. You also want to have your expenses. This is also part of your chart of accounts. So whatever rents, leases, cost of goods sold, wages, insurance, legal and professional fees, permits, travel, meals, depreciation, and so on and so on and so on and so on. You want to make sure you have a list of those things to put into whatever system you have to set it up from the gate. You also want to have a list of your liabilities, your accounts payables, your business loans, your notes, your mortgages, and so on and so on and so on. It's all a part of your chart of accounts. You set that up. Now, and once you have your chart of accounts set up, we call that a mapping, all right? And this is what I talk to my own clients about, is about mapping, so that when anything happens in your business transaction-wise, you know, you can actually look at the route of travel from one transaction to the next. And it has a destination, has a place to go. Everything has some purpose and some place within the transaction space, okay? So that's the purpose of setting up your chart of accounts. So when you do that, you want to have a good system that can automate transactions for you. So you link your bank accounts to whatever system you're using. I'm going to use QuickBooks for an example because I use QuickBooks with all of my my bookkeeping clients. I use it because it does all this stuff. It has a great intuitive nature to it where it can create transaction rules. It can recognize transactions that are similar and automatically assign them to specific categories. And when you do that, it just saves so much time, okay? And with that being said, when you set these transaction rules up, you really streamline your ability to create these automated systems and automated reporting for finances. You can have real-time reporting and up-to-date financial information for your business. You also want to set up your invoicing and payments through whatever cloud bookkeeping service that you're using. Reason being is that every time that you create an invoice through your bookkeeping system, it also impacts the balance sheet where your accounts receivables go up and it shows like the accurate income that's reflected for the period, okay? This was a real quick introduction to this, guys, to get you an idea of what needs to be the next steps for setting up your financials for your business. You want to definitely have a system for recording your P&L, your income statement. You want to have a system for showing how that income statement and all the operating activity affects the balance sheet, and then being able to report that and communicate that to an end user. All right. All right. So I hope that was helpful for you to get an understanding of what you should do to set up your financial statements and do your financial reporting. I'm hoping to be able to discuss this more with anybody who's interested. You can reach me at any of these means, by any of these means here. You can hit me by email, by phone, or you can set up a meeting by using this link here on this slide. One thing you want to also keep in mind is that you really don't necessarily have to understand every aspect of income statements and balance sheets as long as you have a good cloud platform that you're using, like a QuickBooks. It does a lot of the work for you. so that you don't have to think about some of these aspects. So I want you to understand that. You do want to have an idea of what these things are, just like I went through everything with you earlier on in the video. You know, what is a balance sheet? What is an income statement? But as far as being detailed and understanding every aspect about it, you don't need that. You just need to be able to have a system to populate that financial statement. So as I mentioned earlier, if you have any questions, you can always feel free to reach out to me by email, by phone, or if you want to set up a meeting, you have the link right here to do that. All right, I wish you all the best. I'm hoping that helps out a lot, and I will talk to you later. Take care.